This is Amy Zimmer from Holland Hunter Realtors with your home tip of the week. Second homes, investment properties, vacation homes, rental properties. Is there any real difference among them? And when you own one, does it even matter what you call it? Making the distinction between a second home and an investment property is important not only for tax purposes, but also for when you seek financing for the home. There actually are some very big differences between second homes and investment properties, especially if you're getting a mortgage. It's important to keep the terminology straight. A second home is just that, a second property where you and your family spend time away from your primary residence. You also might hear a second home referred to as a vacation property. Earning some money from your property doesn't automatically make it an investment, however. Accurately defining the piece of property depends on how much time you spend in it. Pay attention to the 14-day limit rule. If you personally live in your second home for 14 days or fewer, or less than 10% of the days it is rented during a year, then it would be considered a rental property, and the income earned would be taxable. An investment property is one that you purchase with the explicit intention of generating income. Financing a second home or an investment property is very different from financing a primary residence. And while some mortgages on second homes and investment properties have some similarities, there are also some key differences. You can expect to see a higher interest rate for both second homes and investment properties than for primary residences. Why? Because lenders view both those transactions as riskier. Whether you're buying a second home or an investment property, you might also need to do some extra legwork in order to qualify for that second loan. Your bank may require you to prove that you have healthy cash reserves to ensure that you can afford additional mortgages or mortgage. Depending on your situation and your lender, you may also need to bring a larger down payment for an investment property or second home, typically around 15 to 25%. If you're buying an investment property, your lender might also allow you or need you to show that the anticipated rental income will help cover the mortgage payment. Prepare to pay for a specialized appraisal that takes into account comparable rents in your area. Your lender may require a second home to be 50 to 100 miles away from your primary residence. An investment property, however, can be anywhere in comparison to your primary home, even next door. Federal income tax rules are different for vacation homes and investment properties. Generally, you'll treat your second home just as you would your first home when it comes to taxes. If you itemize, you can deduct the mortgage interest you paid up to a certain limit. If you own an investment property, you get to deduct the mortgage interest plus many of the expenses that come with operating a rental business. But you also have to report your rental income too. It's important that you're totally clear about your property type and do not use the terms second home and investment property interchangeably. Some people try to pass off their investment property as a second home to get more favorable financing, but you shouldn't do this. If you lie on your loan application, you could be committing mortgage fraud, which is a federal offense. So good luck and happy home buying, and now you know.